Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that so many of you have chosen to join me on this beautiful Monday morning. Today we're going to talk about tariffs. So it's a little bit of tariff talk and a little bit of telecom talk, because which businesses might be impacted impacted by tariffs? And if I'm thinking about that, I'm thinking about what companies might offer a service as opposed to a product where it doesn't have to go through customs officials to cross, boundaries with respect to different countries. And you have, companies like Netflix, like Cisco, like T-Mobile, who have international businesses and who don't have products moving across physical borders. So we're going to look at, how to trade within this tariff tainted, this new reality that we are seeing. And it's not that necessarily I'm not making any political commentary on the validity of tariffs, but it's having an impact on the markets, and how do we roll with that? So I always like to invite those of you who are not already following me in the land of X to join me over there, formerly known as Twitter. And this is one of those places where I'm able to communicate with you and you with me outside of webcasts and live events like this. We also have Mike Fairborn with us in the chat today. He's a friend and a fellow coach. And if you are not following him on Twitter, you're missing out, because he posts a lot of great content, and his handle is Mike Fairborn CS. And then just, quickly to recognize, like, so many of you are in here 15, 20 minutes ahead, and you're chatting back and forth between each other about what's going on with particular stocks and what's going on in the economy in general, or just, the weather report. So thank you all for being here. So to John and Lola and Jack and Raj and Kenneth and Backroad Bob, I love some of these handles, and Randy and Frank and Sia and the rest of the gang. Riceberg and Will are here, of course, and Jay and Lisa. Thank you all for helping bring this class to life. So just before we get into the thick of things, know that options carry a high level of risk and aren't suitable for all investors. If your accounts are with Schwab, you have to apply for option trading privileges, and not all will qualify. So that's an important thing to understand. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn, to make sure you understand these trading strategies prior to us considering trading them in a live account. There are some nuances and differences. One is that short options will never be assigned early in Paper Money, and that can happen in a live account. This class we started in January with $25,000. Our max position size is 5,000, and our max risk per trade is 500. Our focus is on a shorter to more intermediate time frame, and we're trading both bullishly and bearishly, depending on what's going on in the market in general and with individual stocks. If you have never been to a live event, you may want to consider, Frank Girardi just posted in the chat. He lives here in the Salt Lake City area, that he'll be driving down to Denver to attend the Denver event that's coming up a little later this year. Our next event coming up is Scottsdale at the Phoenician in March. It's a 2-day workshop, followed by an advanced option workshop. And you guys were the first to hear about these advanced option workshops, one happening in Detroit in April and the other in Chicago in March. I will be at the Chicago event. And in fact, I'll be at more events this year than I was last year. So if you do come to a live event, please come up and say hello. I would love to meet you. We can take a selfie together and, maybe enjoy some of the breakfast libations and stuff that they have out for us at these events. When I was a client, I would get on a plane. I was living in Michigan. I'd fly to DC or here to the Salt Lake City area. I'd drive to Chicago. I just found it so impactful to be able to be surrounded by other like-minded people and immerse myself in this. At the time I started in 2011, I had a crazy busy household full of teenagers, and this allowed me to just focus on the world of trading for 2 days. And I loved it. And like, who would have thought? Like, I had no intention at the time of making a career of this. And in 2016, I joined the coaching team, and well, haven't looked back since. Still loving it. Okay, so let's get out to the platform. And I used to spend about 10 minutes doing a quick market overview at the beginning of every class. And, Kevin Horner does a great job in, when the bell rings at 9:30 Eastern, several mornings a week, he does a pretty in-depth thing. And then Mike does a market forecast, sector kind of thing on, I believe it's Wednesdays. Mike, could you put in a link to that class? And then on Friday afternoons, Ben Watson, when he's not at a live event, he does kind of a market overview. So I'm going to leave that in their hands and then use more of our time together to look at, how we might want to manage our small account. And so when we look at the S&P 500, can we characterize this as anything other than bullish? There's been a lot of volatility. There have been a lot of angsty moments in the market so far year to date. But if we take a look at a 1-year chart, we are still up, 19% over the last year. Today, we had kind of a bit of a rocky start to the day, but we're now up slightly on the day, and this Harami pattern is perhaps a bullish indication. And the NASDAQ kind of the same, we're still up 20%, and the trend has been uptrending. We hit a new all-time high on both the NASDAQ and the S&P twice in the last week. So, that's not too shabby, right? And the Dow, that hasn't hit a new all-time high yet this year, but it came within a stone's throw of it and is now sitting with this Harami pattern on the 100-day moving average. Sectors in the last 3 months, it's communications that have led the pack. And, are we wondering, why that is the case? And I talked about tariffs and how some people might be looking to go more, to stocks that might be less impacted by tariffs. And then are we now surprised that Staples is all of a sudden looking, like the golden child? Over the last 3 months, it now is in second place and followed by healthcare. And today we have this kind of double bottom pattern with a breakout happening on Staples. And so if we said, well, if these two sectors have been the strongest, could we just create a personal watch list? And I did a mini session on this, on just how to create watch lists. And this is a dynamic watch list, because if you come and look at this personal sector communications, this little thing beside it means that it will recalculate, and it's pulling everything in communications that's also in the S&P 500. And if you wanted to, just let me bring this over. If you haven't subscribed to the channel, if you've already subscribed, don't hit the subscribe button again. But if you haven't, you may want to consider subscribing. And, this is the trade management mini session playlist. And I just added a new example trading plan this morning on stock investing. But if you scroll down and you're wondering, how to create a scan to create sector watch lists, here's a quick 10-minute video. And if anybody is new to these webcasts, please type a greeting into the chat so we can welcome you. But, I've created a bunch of short videos on just, how to customize the option chain or the monitor tab or a chart, all that kind of stuff. So you can just kind of peruse through those. And then there's also a list of example trading plans. And I'm trying to add a new trading plan, at least a couple a month. Okay, so that's that. And when you first come to the, Trader Talks from Schwab Coaching, which you've hopefully subscribed to, what you'll see is whatever is either playing now or up next, and then you can come to these playlists. So today we're going to talk about a couple of different option strategies. And if you're not familiar with those, you may want to come over here to this Start Here, Options Basics. Whoops. And there's a list of 12. Sorry, view playlist. There we go. So it starts with 1 through 12. And today we're going to talk about long call verticals. And so, that's week 9 of 12. So you may want to check that out. The other one you may want to look at is buying a call, because we bought a call and it hit our target today. And so we're going to do a little quick review on that. Okay, so that's that. Let's come back to Thinkorswim. And I had said that we had bought a call. The call we bought was on XEL. And we bought the call on this day. And why did we buy a call on this day? Well, when we looked at the chart, is anybody else seeing kind of what I'm seeing? And this is what we saw when we placed the trade, which is, why, sorry, I've been posting stuff on Twitter this morning or on X. So now it was a double bottom. Actually, it was on Berkshire. But we had this inverted head and shoulders pattern. A little sloppy. And so on this day, we bought a call and here was our target. And so it hit that target today and we're now out. We also, and I will do another mini session and it'll be the ones with the tangerine titles if and when it hits our stock target. So we still have a stock position, but this one ATR target was hit today and we placed both those trades back here on this day. So that was, I think, a week ago today. Okay. Okay, so how did that trade turn out? So we can see here that we bought it on the 14th. Oh, so that was Valentine's Day, so a week ago Friday. And then it hit our target today. And so we paid $1.11 per share or $111 per contract, which meant we could have lost how much? $444. Now, or, all of this $1.11 per share. And so how did it end up turning out? Well, if we take our $1.95 minus $1.11, and I already did the math, not that we can't do this part in our head. So we made 84 cents a share times how much? Times 100 or $84. And then we did 4 contracts, so times 4. And that came out to $336. And so what do we call that? We call that a base hit. And we haven't had as many of those as usual. We're actually down a little bit in our account so far year to date. So we've had a few rough innings, but this is a base hit. This particular one worked out. And if you want to look at that as well, how much were we risking? So what was our return on our risk? Well, we made $84 a contract and we were risking 111. And so that was about a 75% return on our risk. Now, are we expecting to have a similar type of return on the stock investment? No. But what's the advantage of a stock investment is that we don't have to worry about time decay. And so if it takes a little longer, we're okay. We're tying up more money, but it's not as subject to the vagaries of time decay. All right. So what are we going to look at first? Well, let's look at NWS. NWS. And when we look at this, how many shares a day does this trade on average? Well, on Friday, 785,000, 2,000,004, 874. So it might be a little shy of a million. And then we're 2,000,015, you know, 1,000,005. And so if we come and we look at the options for this, what's the bid-ask spread like? Okay, one word, you know, horrific. 265 and 350. It only has monthly options, 230 and $3. We don't want this to be more than 20 cents apart. You could drive a truck through that. So when we look at this and we would say, well, okay, you know, options aren't tradable on this, but this is a $32 stock. And so, you know, and what sector is it in? It's in the communications sector. So how did I find it? I brought up the communication sector stocks and I just started clicking from stock to stock, looking for a potential example trade setup. And so when we kind of look at this one, you know, what are we seeing? Well, we're seeing this Harami pattern at a support level. And we're seeing a stock, you know, when we back things up a bit, you know, in the last 2 years, it's gone from $15 to $35 a share. So it's up more than 100% in the last 2 years. And so when we look at this and we say, okay, well, what happened on earnings? Well, it moved to the upside. You know, it kind of met earnings. And then the next day it gapped up on the open and then ended up pulling back and closing lower on the day, but then has been moving up since. And then the last, you know, so forming kind of this big bull flag. And then we have this inside day happening today. So could we buy 100 shares of stock? It's sitting on the 30-day moving average. So if we look at yesterday's candle, that low, or Friday's candle, that low was 32.19. And could we say, well, hey, if this goes, you know, more than 3% below that, it's not going in the direction we were expecting. So if I take that 32.19 and I multiply that by 0.97, and you know, this is just, you could make it, so 31.22 would be our stop. So you could make it a 5% below, you could make it 2%. The tighter your stop, the more likely, however, you will be stopped out. And then if we wanted to do this as a shorter term trade, could we put in a target up here at around this $35 mark? Sure. And you might say, well, you know, that's not much. But, you know, if we got stopped out at 35, or it hit our target rather at 35 and 32, let's call it 32.60 we're paying to get in. If we made 240 on that, you know, and I divide that by what we're paying to get in, our 32.60, that's 7.4%. You know, that beats a poke in the eye with a sharp stick. And so AJ is saying, yeah, but the volume is really low. Isn't our rule 1 million shares a day? And AJ, you're absolutely right. If we want to trade options on that stock, that's one of our option parameters. Now, I just showed you the stock. This is a trend trading growth stock as opposed to a swing trade with a stock. But in our example, we said, well, as long as it trades 250,000 shares a day as an example guideline for volume for a stock. And this is certainly higher than that. You know, it's probably closer to 750,000 shares a day. Now, the reason we wouldn't consider a buy right covered call, if we come to the trade tab, remember we looked at the options, the bid-ask spreads were dismal. And so we're just going to buy the stock and we're going to put a swing target on it of this 35. Swing target, and we'll make that 35. And so we can do that with an option or with a stock. And because the options don't meet our trading requirements, you know, we're going to go with a stock purchase. We also have $7,000 sitting on our account. This Harami pattern is considered to be a bullish configuration when it's at a support level. And so that's the significance of it. And if you're into technical analysis, there are some technicians, you know, who would say that this doesn't require confirmation and that we don't need to see another candle moving to the upside, that this can be considered a bullish indication. Now, do these always work out? No, they don't. Sometimes you get this kind of configuration and then it doesn't play nicely and goes the other way. So, and that's why we put a stop in so that we can define our risk. So we are looking to buy custom with an OCO bracket. We're going to buy 100 shares and we want to sell those shares when the stock price gets either up to $35 a share, or if it goes down to, what was our number? 31.22. Okay, good till canceled. Confirm and send. So we want to buy 100 shares of News Corp at $32.66. We want to exit if it goes up by $2.34, or if it comes down and hits 31.22, it will enter a market order to sell at the next available price. So not a guarantee we're going to get out at either one of those prices. Okay. So fire in the hole. Okay. So that's our first one. The next one I wanted to look at was AT&T. So kind of staying with this similar theme. And this is hitting, you know, a new high here. And so you might say, you know, like, hey, this is a 3-year high, could be an all-time high. Nope. You know, 5 years ago, it actually hit 29, and right now it's at 26. Now, there's no saying it will go back to 29, but we have this kind of bull flag pattern. And could we have traded this Friday? We could have, but we didn't. But, you know, could we do this as just a trend trading growth stock? And some might say, well, didn't you notice that this pays a dividend? And yes, it does. So you might say, hey, you know, this pays a dividend of 4.13%. It has a PE ratio of 18. It's in the communication sector. And so it's kind of checking a lot of boxes, isn't it? That might make it appealing to an investor that would like to be invested in something, maybe something that pays a dividend, something that's considered to be a value stock, which some value investors might say is a stock with a PE ratio under 20. But, you know, there's no guarantee that dividends will continue to be paid. You know, so, and someone's saying, yeah, we're already in Verizon. Well, this sector kind of has some broad appeal, doesn't it? Right now. And we've seen in the last few weeks, many of these stocks really moving pretty dramatically. But this one is in our snack bracket in that it's $27 a share. Now, if you go and you look at that example trading plan, you know, it would say, does this trade at least 250,000 shares a day? Or if you want to be able to trade options, does it trade 1 million shares a day? Well, check. Does this have options that are tradable? Well, when you come to, you know, the at the money option, you've got thousands of contracts here, and same on the downside. So if we bought 100 shares and we wanted to buy a protective put, that would be feasible at some point. Now we're just on the other side of earnings, so maybe we'll just use a stop and where my, you know, we've placed other trades on AT&T that look like they've, worked out. But could we come to this low here on this day, 25.94? And if we go with that 3%, just as an example, times 0.97, our stop would be at 25.16. And so, and then, if it continues to go up, we'll just stay in the position. And so we're doing this as, it pays a dividend. So we could put this in our dividend section. I think we have one. Stocks with dividends. We currently have one position in here. We bought 50 shares. We have actually more stock positions. We typically have very, very few. So we're going to come to the trade tab and we're going to look at buying again 100 shares, and we're just going to put a stop on this one. And our stop is going to be 25.16. Now, when we have a survey, and I don't know if there's been a survey yet posted today, but when we have a survey, one of the questions that has come up a couple of times is, could you do more examples using stocks? And so we're starting out the week with 2 of those. Okay. Yeah. And so this one is kind of bouncing off the 10-day moving average. And so some might look at this and say, like, hey, this is so far up in the so stocks with dividends. And again, stop orders aren't guaranteed. But when we look at this chart, they're saying, like, it's so far above the 30-day moving average, it could get a nosebleed. And this is true. But, if we had bought on this day, it was quite a ways above the 30-day moving average, and we would have been pretty happy with ourselves, wouldn't we? And so sometimes these moving averages can take a while to catch up. And so we're going to put our little circle here to just indicate that we have entered a new position. Okay. So Jay's saying, like, thanks. I do appreciate the stock examples. And I know some people are extrapolating this because they have a much larger account and want to trade a portion of their portfolio that might be bigger than $20,000 or $25,000. And then other people are saying, like, I wish I had that kind of money. Like, I've got a $5,000 or a $10,000 account. So where we did, 4 example contracts on the XEL trade, some might say, well, when I'm position sizing for my account size, I'm only going to do 1 example trade, and I'm only going to be risking that $111 or whatever it was. Okay, so we've done T, we've done that one. Let's look at T-Mobile. So somebody, it's funny, that was on my list today. And if you're thinking, like, where did she come up with these examples? Well, I looked at what's going on globally in the news. I looked at sectors, and then I just created a scan for the communication sector. I sorted it alphabetically, actually, so I could just click through them. And T-Mobile, well, why might T-Mobile look interesting? Well, it gapped up on earnings, came back for a whopping 2 days, and then we just have this big kind of bull flag, like it's pulled back one day. But, this has been a really nice move for this stock, hasn't it? And again, this one doesn't pay as robust a dividend, but since earnings, if we come back to here, hitting a new high today, that's up 26%, where it is now 25%, 24.89. So it's been moving. And this one is a $270 stock. So that's harder, for us to buy shares of. Now, could we buy fewer shares? Yes, but we only have $1,300 left to invest right now. So, and if you're saying, well, geez, but this is moving up nicely, it's sitting at 270. could we come to the trade tab? And if the expectation is that it might continue to move up, could we come out to the monthlies and say, hey, what about this 270? And why do these have, so we've got 2,000 contracts here, and at the 280, we've got 1,000 contracts. And why did these in between ones start with 0? It's because they just became available to trade today. And so we can see that these have, 90 contracts already traded today, 40, 14. But when you look at the bid-ask spread, 685 to 710. So that's 25 cents. It's not much different on these in-between strikes. It may be, this is 35. It's 10 cents more, but it's not an extraordinary number higher. And so if we're looking to take advantage of this, could we buy a vertical? And by buying a vertical, what does that allow us to do? Well, take advantage of a movement up in the stock. And how much are we risking? Well, we're risking $125 to potentially make $125. So that's a 1-to-1 risk reward ratio. But our guideline in this class, because when I first started trading this, if I could make $125, I wanted the entire $125. And you know how often I got it? Almost never. So I hated these long verticals. It's like, I'm going to just like dig a big hole and bury this strategy because it so seldom worked in my favor. And then I thought, what if I wasn't so greedy? What if I was happy with, say, a 50% return or even a 25% return? And we're only in this for what, like 20, 25 days. Like that would be not too shabby. Like if you went to a party and somebody said, how's your trading going? It's like, yeah, I just made like a mere 50% on this trade. I was in for 3 weeks. They'd be cuffing you upside the head and going, seriously, what are you doing? Is it legal? Yeah, it's legal. And so how many of these can we do? We're going to do 4 because that would be $500 worth of risk, right? Right. And then we're going to come to single order, first trigger sequence, right click, opposite order, and we're going to multiply that 123 times 1.5. Well, let's call it 120 times 1.5. So when this is worth $1.80, another 60 cents, we're going to, thank the trading stars and take the money and run. We're looking for a base hit. So this is never going to be a home run. We're never going to, we're not aiming for the 75% kind of return that we ended up getting on XEL. But we're defining our risk. How much could we lose? 480. How much are we looking to make on these 4 contracts? About $240. And, can we change our mind and get out earlier? We could, sure. Long call vertical. Okay. So fire in the hole. Okay. CL. Now, what if you're looking at something and you say, well, one, why didn't that one fill? And so what we want to do is look down here and see if there is something that is to open, or we can sort by time placed. And these are the oldest orders. Click again. Now we have the newest. So it's saying, okay, well, since you put that order in, the price has gone up. Okay. So we're going to cancel and replace that. It's now 133. We'll make it 135. Okay. Fire in the hole. And sometimes we end up with what we call a paper money fill. So things can be a little different in your live account. And I'm just going through and I'm looking at the chat for a second. Okay. So we'll just let that one kind of percolate, okay? And then what if you see something and it looks interesting, but this, the setup, it's not quite there yet. So let me introduce you to Cisco. Now, how did I see Cisco? Well, it's been on my list. So even though this wasn't in, the sector chart, we come to the Analyze tab and fundamentals, we can see this is actually a tech stock, and tech has been getting hammered today, and this has been getting kind of hammered along with it. But it's kind of come down to this support level, hasn't it? And so if you're saying, well, hey, I'm going to have company in town, or I don't know, I have a busy week coming up, I may not be able to look at the markets as much as I typically do. Could we put in an order? Now, we're not going to be buying the stock, but could we say, hey, if this goes above today's high, which is 64.58, if it goes above that by 20 cents, so 64.78, then I'd like to buy a call. And, we could treat that as a swing trade, which means when it gets back up around the 66.50, we would like to exit. Now, can we afford to do that with a call? Well, let's see. So if we come to the trade tab and we come and we look at Cisco, and we may even want to come out to April just to give it a little more time. Although, we look at these weeklies, there's a lot of volume even on the weeklies. Like this has got over 6 million shares traded today. And there is an example trading plan for a 1 ATR trade, and our target's going to be a little different. I haven't done a swing trade plan yet, but stay tuned, it will be coming. But if we come out to April, we've got 52 days. Now, are we expecting to be in this for 52 days? We're not, but it just gives us more time and is less hurt by time decay. So we can see the at the money strike. This is costing us 3 cents a day, almost 3% a day, just the passage of time. Where when we come out to April, it's 2 cents a day. And you may say, it's only a penny, no big whoop. But this is a dollar stock. If we're in it for 10 days, that extra penny a day is 10%. It's not nothing. So if we look at this and we say, okay, if I look at this at the money strike, that's $1.04 to $1.06. We have a 2 cent bid ask spread. Do we have enough contracts? So if we come down to our basic 12,000 contracts, I think we're good. So we're going to look at the chart. Our target is going to be that 66.50. And so it's a swing target, and we only want to get in if it goes above today's high. Now, what if tomorrow it sets up a Harami pattern? Then are we going to go in and change our entry? We are. Was I using the daily chart? This is a 6-month, 1-day chart for Cisco. Carl, good question. Okay. Yeah, so if the vertical goes against us with T-Mobile, if we're down 50%, we're going to exit. Okay, so we're going to come to our trade tab on this one. We're looking at buying a call. How many of these could we do? We could do 4, and we'll still be under $5 a share. And we're going to buy custom with an OCO bracket. Okay, so we're going to do 4 of these. And then I'm going to click my little firecracker, turn it into a paper clip so that these match. We're going to say, hey, if this gets to the point where we've lost half our value, that's our exit on a swing trade. So if it gets to 53 cents, we're out. And then our target is going to be based on the price of the stock. So our target is 66.50. So we're going to click our little sprocket. And if this goes at or above 63 66.50. We want to take the money and run. And this, we're also going to make good till canceled. And we're going to make this a market order. And we're going to click our sprocket again because we have a condition for this one also, right? We only want to buy these 4 contracts if and only if Cisco goes above 64.78. And it's currently trading at 63.48. So 64.78. Now, is that option going to be more expensive? It is, but we have some wiggle room. The current price was like 103 to 107. And at that, we'd be risking $416. So it could go up like 25 cents a share and we'd still be under our 500 or around the 500. So we want to buy 4 calls on Cisco if it goes above 64.78. And then we want to sell when it gets to 66.50. Or if it loses half its value, we want to exit. And we're going to put this in our long call group. And this is a swing trade. Now, we do have, boy, our long calls have had the stuffing knocked out of us. So AppLovin, we're now down 62% on that. So we are going to exit that position because that's our rule. If it's down more than 50%, we want to exit. So we're going to come to App. And now I'm going to, well, here it is here, the 490. We're going to cancel that order or cancel and replace. And we're going to buy it back. And that's how quickly we can do that. And if we come and we look at the chart on this, you know, we entered it. Let me just see when we bought that one. Oh, we're now out. So we bought that one on the 19th. So on this day. So, you know, it had gapped up on earnings, pulled back. And, you know, it may have been up on the day, well, you know, when we entered the trade. But then it had a couple of really tough days. And, you know, this could end up bouncing and end up being okay, but we're down over 50%. So we're going to take our licks and, you know, live to trade another day. And so this one is now done. And we ended up down 60% on that one. Okay. So, and that's our rule. And one of the beautiful thing about having rules is then you don't get caught up in this 4-letter word called hope. Like you keep hoping it will bounce. And so, you know, if we have that. So with the stock position, Ian is asking, do we have that 50% loss exit criteria? No, we absolutely do not. We placed 2, we placed a couple today. One was on NWS, and our stop on NWS was at 31.22. Here's our stop. And if it goes down and hits that stop, it will trigger that stop and we'll be out. And what did we pay? We paid about $32.50. I don't think the price has changed that much if we come back to NWS. So we paid $32.61. And we went through that calculation. And so if we subtract it, let's just assume that, you know, we're getting out at exactly the stop price. We're risking $1.39 a share. And so $1.39, if I divide that by 32.61, we'd be down about 4%, not 50%. Yeah. Yep. So we do have exits in place. We know when we're getting out before we get in. And we've talked about this a couple of times. So, with a stock where we're buying it as a trend trade, like T-Mobile, if we got into T-Mobile, well, it's like we know when we're getting out, if the trade goes against us, our stop is somewhere down here. But if it continues to go up, we'll stay. Well, how do we define trend being broken? And if you go to that example trading plan, it will walk you through that. Okay, so guys, we are out of time. So one of the things that does come up when there is a survey is you want to see what we did today. So we bought 100 shares of NWS, 100 shares of T-Mobile, and we did a long call vertical on, which one was that? On T-Mobile, which hasn't filled, but I'll make sure that it fills. And we got out of XEL hitting a target, and app we took our losses. So guys, thank you so much for being with me. Please hit the like button, subscribe to the channel, follow us in the land of Twitter, Barb Armstrong CS and Mike Fairborn CS, and have yourself a really awesome day. Up next, Mr. James Boyd. You'll want to stay tuned for that. Take care, everyone. Bye for now.